All right. Welcome back to capitalcompetent.com. Today, this is going to be episode 4. We are going to go over what's going on in the market and some updates that we've done to the portfolio. Okay, right now we are at 1560 pretty much, which is pretty good. The beginning of portfolios, most of the actual appreciation is going to come from our weekly contributions. Okay, once we get to 3K, 4K, 5K, that's when you're really going to start see capital appreciation, and then you're really going to have an exponential up curve because you're going to have these contributions as well as appreciation, which is all good there. Everything's looking great. If we look at the positions, okay, um, everything is weighted exactly how I would like it. I bought a little bit more of Ford because it was so cheap. I got it pretty much at its 52-week low. Um, I think people are freaking out about this one, but it's Ford. It's going to be higher. Is Ford going to be gone in 10 years? No. It's just so cheap. The risk reward is good. Um, Gold is a safe position. I'm really happy with gold so far. Disney, I think they're going to go and compete. They're not going to reach the heights of Netflix, but I think they are going to produce some numbers with all of their content, their brand, and their parks. Seems good. Pepsi's distribution, I'm looking into Celsius actually. Celsius uses Pepsi's distribution, but they had an issue where they oversupplied the market, so that really hurt them. And Celsius is starting to look like a deal. If that can go under 20 bucks, I'll look at that. And then energy, this is just a play on needs. The company, 80% of the world, or excuse me, 80% of America depends on the products of Exxon. Intel's got some big news. SMCI is looking to run. We're gonna have to see what happens there. I still think this isn't a good buy till about 20, um, under $20. Okay, now let's get into the main one, the S&P 500. The S&P 500 is at all-time highs. All-time highs. It has never been this high before. We've gotten close in January, but it broke that actually today. And what I want to know, or what I'm researching, is how much longer can we push these new highs? Okay, we have experienced, or we have been reporting, CPI reports higher inflation. Typically, you see sharp downturns in the markets when inflation hits 4%. Now, we're not even close to there, but we're going up. And what scares me really is Trump in these trade talks and these tariffs is going to historically um, create short-term inflation. Now, everything will be fine in the end. I think this is really good for America, um, but I'm really worried about the short term. And another thing that really worries me is hiring rates are down. Unemployment's not down, hiring rates are down, which means companies are no longer taking on new positions. Okay? And hiring rates slowing down can lead to unemployment, a spike in unemployment. And the sudden spike in unemployment can really, really hurt the markets because it'll shake everything up, right? And this is a wait and see thing. I think that is the word around everywhere is wait and see. I think we know, I think everyone deep down knows that this isn't going to push high forever. It's going to correct and then keep going. I think everybody knows that, but we're just waiting to see when it happens, and we're enjoying the ride up so far. So, what do you do, right, when you're in uncertainty? Well, good thing for us is we have a plan, right, with the weight of the portfolios. Now, once we get to a certain capital position where this is over 2 grand, maybe 2,500, we can start to hedge, right? If the S&P 500 drops before then, I mean, the capital, our contributions are still so high that they're just going to cover the appreciation loss, right? But if we get up to capital we can actually work with, which is 2,500, something around there, we can actually hedge against the S&P 500 and then make money while it goes down, and then use that money to put back in. And that's where you can really take advantage of it. And we use that through puts, and I've been doing it in my other accounts. It's been working really well. Um, I've been mis-executed on a couple trades where I should have made close to $1,000 and I only make 500 because I don't understand why Charles Schwab's stop limit orders don't go through. I have to check that out. But really, really exciting stuff right now. The news that I have today is just pay attention, right? Don't let this, it's there, right? There's a correction coming, but don't let it catch you off guard. Stick to a process, your own process. I could be completely wrong about this. We could keep going all the way up to 660 this year with no correction. I could be completely wrong. I'm just a guy that wants to do right, educate people. I used to listen to YouTube people online, and now that I've researched, right, I went to college for finance and accounting. I do nothing but research on the economy. I mean, I really pay attention to this stuff. The more that I've learned, the more that I realize that these YouTube people just have no idea what they're talking about. They catch a big run on a company like Tesla, and that gives them confirmation bias that they are geniuses. Now, that being said, right, I don't think I'm a genius. I think that there's mechanics to an economy, and all you have to do is just pay attention to it, right? Look at the past and compare it to the future, right? So, and I want you to do that. So while you're watching my videos, I encourage you to challenge what I say. I could be completely wrong. You could be completely right, right? Do your own research and challenge what I'm talking about, right? Um, in terms of an update, that's really all I have for you. I'm going to keep with the standard process of 40 to 50%. I got my dry gunpowder in case something happens. I got my personal picks. I have not done risk on yet because we have not gotten to the point where the capital um, requirement to actually have something that's worthwhile, we're just simply not there yet. So as we grow, we can really start getting into some risk, and then we can really start seeing some appreciation. I'm really excited for the future. I definitely encourage you to subscribe, leave a like, leave a comment. I'll interact with everyone that I can. I'm really excited for the future. And yeah, before I end things today, I along with the 1 to 10K challenge, I also have done James Explains, right? And this is just for you, if you have a complete, you don't have an understanding of anything, it's articles on how do stocks works and what are the risks, right? Really, really, really simple. Simple stuff, but you can always come back to it, and that is for you. Like I said, I'm trying to build a community where we can all help and challenge each other. Because if we have a big group of people that all have different ideas and we are open and listening to each other and challenging each other, the typically the cream will rise to the top, and we will have the best ideas together, and we will hopefully make a lot of money, which is the point of all this, to become capital competent. But yeah, thank you for watching. I will add $105 and I will see you next week.